Welcome back to the Mountain Morning Show. I'm joined by the CEO of FuturesANIMal, Travis McGhee. How are you, my friend?
Good to see you again.
It's good to see you again.
Yeah.
I'm excited to talk to you. Last time we talked, I went home with a little more knowledge, and I'm excited to do that again today, because one of the things that's kind of interesting about finance, and I mentioned this in the outset of our show this morning, is that things are happening so much faster now. You know, it used to be that, you know, you put in a paper trade and you could kind of wait. Things were slow to happen. In fact, you didn't even know till typically the end of the day how much you ended up getting out of your, out of your sell order. So there was always a little bit of a question. Now a sell order goes through in a half a second. You know exactly what you made. It's interesting.
It's crazy. You hit the little mouse, and all of a sudden you actually own it. You know,
yeah.
It's not, you don't have to call the broker anymore.
No,
it's a different world now than what it was.
One of the things that, of course, that does too is with the excitement of that and the possibility of making a lot of money in a very short period of time. There's also a little more risk on the side of that as well, isn't there?
Right, yeah, there can be. There's certainly more perceived risk.
Right.
And we talked
That's a good point.
Yeah, we talked about this a little bit last week. You know, as a matter of fact, it was last week we had a major outage. The week prior to that, actually I think it was 2 weeks prior to that, we had the major outage with the NASDAQ. So, you know, there's a lot of perceived risk around things moving quickly. You know, everything being based on technology, you know, the failure of technology. So, yeah, certainly that, you know, scares people
of course.
A little bit.
But perceived risk is the point, because at the same time as there is certainly some risk and reward, there is a lot more of an opportunity to get information and to invest wisely, isn't there?
Yes, absolutely. That's a great point. You know, as I was going to say, there's pros and cons to things moving quickly and to the availability of information. The pro is the availability of information. You have access to the same information that Wall Street has.
Right. All the financials that you could possibly want of any company.
I know a lot of folks tend to think and like to think that, well, Wall Street has a hand up on me as a retail investor because they're professionals and they have this and they have that. It's really not the case anymore. You have the same access, and virtually the same access to free information that they have. Now, you certainly don't have the connection, the network connection to call up your buddy that works at Goldman or, you know, JP Morgan or something, and maybe you do, but, you know, that's really the only thing that Wall Street
The pulse is probably what we're talking about here, right?
Exactly.
When you're there every day, all day long, you have the pulse of what's happening, and sometimes that can lead you to invest a little faster, maybe at the right time.
Absolutely.
Your timing can be a little bit better.
Absolutely.
Typically,
having a pulse on the market, that's a great way to put it. And you know, that's something I take away a little bit from my experience when I was on the floor. When you're doing it every single day, habitually, you start to understand how things ebb and flow with the market, because there is an ebb and flow to the market, which makes it, I don't want to say it makes it easier to invest, but it certainly gives you more confidence in your investing.
Well, you're part of the mood at that point, right? And mood is what it's it's kind of strange, but the market has mood swings, and when you leave the market that day and you go to the, you go out with everybody else and they're grabbing a bite to eat or a drink or whatever, you know what tomorrow is probably going to be like, don't you?
Exactly. So what we try to do at FuturesANIMal is create that mood. So we try to get people into the habit of walking into the day, having a feeling, having knowledge of what the market could potentially do that day or the night before. And a lot of that's just very simple. It's watching the news, it's reading a newspaper, it's following a couple of the financial blogs on the internet. It doesn't take a whole heck of a lot of time to get yourself acclimated to the investing community and kind of getting into that mood and understanding what's going on. You know, you're just putting yourself in a position to succeed.
One of the things I think is kind of interesting is a lot of people don't understand that this is like any other business.
Right.
The more time you put into it, the more money you stand to make. And that is because of that, because you'll have more information, because you're researching more, because you're reading and understanding more. I think for a lot of people that's something that they don't recognize. It's just a matter of timing, spending time.
Exactly, and that's a great point that goes back to what we were initially talking about. in the days of old, and I don't want to make it sound dated, but in the days of old, and by days of old I mean 10 years ago.
Right.
In the days of old,
We're so old.
Yeah, it was again, it was that buy and hold mentality. You buy a stock, you hold it, and you just watch it appreciate over time. And what that did was it tended to push people into treating investing like a hobby. It's
Right.
something you can just kind of dip your toe in and do whenever you feel like you have time to do it. We're very adamant with my organization and with our clients. It's treating investing like a craft. You
There you
have
go.
to treat it like a craft. You have to spend as much time managing your financial well-being as you do anything else. We were talking last week about people spend more time managing their fantasy football lineups.
Oh, for sure.
But it's just, we spend more time, during
The
the day
research they put into that is unreal.
it is, deciding what we're going to have for dinner. You insure your car, you insure your house. You do a lot in your life to, protect yourself, but no one ever looks at their finances and says, what can I do to protect my finances? What can I do to mitigate that risk?
Well, let's talk about that for a little bit, because now that we understand that there is risk in the market, clearly we know that.
Right.
How do we start to mitigate that risk? How do we protect ourselves? What do we do?
Well, for one thing, I like to refer to it as 3 Ds of investing. The first thing everybody needs to do is really determine a plan. When you're heading into investing, like you said, there's risks in anything that you do, but particularly with investing, determine a plan for yourself, determine a plan for your family. Sit down over dinner, talk with your spouse. If you're single, talk with your dad, your mom, whoever the case may be. But talk to somebody, get some help, and understand where you're at, what position you're in, and determine a plan for your finances. Whether it's a 401k, whether it's an IRA, whether it's individual stocks, whatever the case may be. But determine a plan for your finances. Secondly, once you have a plan determined, decide what you're going to do with that plan, what you're going to do with that money. Go ahead and act on that plan. Start allocating those resources into that 401k, into that IRA, so on and so forth. And then the last step, the step that everybody tends to forget, it's human nature, is discipline. Have the discipline to stick to the plan. You can't treat it like that New Year's Eve resolution, or the New Year's resolution where you say you're going to start
we
going
do it for a week.
You're going to the gym every single day.
Yeah.
And when you go to the gym and you see people there on Monday and it's crazy through Friday, and then the following Monday it's empty again.
Yeah.
You have to have the discipline to stick to that plan. If you're putting monthly, a set amount of money into a 401k every single month, make sure you're doing it every single month. And pay attention to how those investments, are doing over time and adjust accordingly. So,
I think that a household, you see a lot of households where there's nothing going on. There's no investing. There's no thought to savings. We've had this problem for a while. And of course, now we're starting to see Americans start to save, which is a terrific thing. We're seeing them pay off their credit card debt at a much higher rate. But we can really, especially you mentioned the families. As a family, you can very seriously take an opportunity right now to change everything, because the winning this game is really about, we keep mentioning time.
Right.
It is about time. It is about staying in the market, certainly, and being aware of it. One of the great things I think you can do right now is, if you're not doing anything at all with your investing, you can sit down with your family and say, okay, the kids are going to start saving some of their allowance. We're going to start doing the 10-10-10 idea. The parents are going to start spending a little time, and maybe we set aside an hour every night, or even that long, half an hour, 15 minutes, just to talk about it as a family. Say, so what's in your savings account, kids?
Yeah.
And talk about it. But at the same time, that's a good reminder for us to take a look at the market and decide what we're going to do the next day, isn't it?
Yeah, absolutely. Time is imperative. And again, like you said, not just the time, the length of time you have to invest, but taking the time every day to understand investing is imperative as well. One of the things, again, that we're trying to do, it's difficult. It's difficult to get into that habit. It really is.
But that's where we're bringing in somebody in to help you remember that. This is like having, you mentioned the gym.
Right.
This is why having a trainer at the gym is such a great thing, because it makes you go to the gym. Right?
You're absolutely right. It's having accountability. It's having someone that's going to be, that's going to hold you accountable to what you're doing. And it's also having someone, the thing that we're bringing to the table is, we've been there, and we've managed money for retail investors hedge fund managers, institutional investors,
Right.
you name it. And one thing that we do is we help people understand where they're at and what that plan should be and where that money should go. So it doesn't have to be your entire family. Just find someone you trust that's
Right.
going to sit there and that's going to help you understand exactly where those finances go. Because again, going back to the whole perception of risk, we said this last week. Risk comes from not knowing what you're doing.
Right.
And if you understand what you're doing, you understand what the risk is. And then once you get into investing, you can start to mitigate that risk. A lot of folks say, well, Travis, is there a way that I can just invest 100% risk-free?
Yeah, there's no such thing as there.
There's no such thing as 100% risk-free investment. But there is a way to be 100% on top of that risk and mitigate that risk to a point to where you're comfortable. Should something, go south with the market, you have protections in place. Just like you have, the car insurance that you have on your car is not 100% risk-free.
Right.
There's going to be some loss associated with that. But in the back of your mind that if something happens, at least you're going to get a new car out of it and replace what you once
Right.
had.
So this is where calculated risk comes in.
Calculated risk, yeah. So that's something we talk about a lot. Is too often investors try to hit home runs, and that's where people really
Right.
get.
Don't come up to the plate always trying to hit a home
Yeah.
run. Just a base hit
Because
works.
a lot you're going to strike out. You're going to strike out more times than you're going to hit that home run. Exactly. You have to go for the base hits. And I've seen it so many times where folks will find that, that one stock that they heard over a cocktail party that their friend invested in, and they dump all of their money into that one stock, just hoping that it's going to go up or it's going to do this or do that, and it doesn't play out the way they wanted. You should look at your investments again in a calculated way and understand if it's a speculative investment or if it's something that you want to hold over time. Understand what you're going to do with that investment, your time frame, how much you're willing to lose. I like to tell folks, if you're investing in something and you can't sleep at night knowing that if that investment goes south, you're going to lose everything, that's a
Yeah.
bad investment.
Exactly.
You are in a very, very bad position. You should be able to go home and sleep like a baby with the investments that you have, knowing that, I've got my plan set up the way I want it set up. I'm allocated the way I want everything allocated. I'm okay.
Yeah, definitely. I think it's certainly one of those things where it's certainly fun to be on top of it and be involved for sure. But if you have to wake up at night to go check the computer to see what what things the market's already starting to trend towards, not a good plan.
You're setting yourself up for
Right.
something really bad.
It should be a little more leisurely than this.
Exactly.
Excellent.
So,
If people are looking to get help, where do they go?
yeah, so you can find us at FuturesANIMal, all one word.com.
Okay.
Again, you can, if you go to that website, we've got our phone number right there. You can call us. Again, we answer the phone as far as our brokers,
Yeah.
the professionals that we have. Just tell the individual on the phone where you saw us, and just talk to them a little bit about yourself, where you're at, what you're looking for in the market, and just consult with us and see if there's a way that we could potentially help you.
Right. A lot of people, I think, in finality here, this last thought, a lot of people wonder if there's an amount that's too little to invest or something such as that. Is there an amount that is?
A lot of it depends on what you're investing in. I like to tell folks, no, there's no amount that's too little to invest.
Because you got to start somewhere.
The bottom line is get started somewhere, right? So no, there's no amount that's too little. It does depend on what particular investment you're investing in. But again, if you're working with a competent professional individual and you have that help, they're going to be able to direct you to an investment to where you can find the best bang for your buck for that amount of capital.
Excellent. Travis McGhee, FuturesANIMal.
Thanks again.
As always, I'm looking forward to next week. I
Oh,
can't
yeah.
wait. What's next?
I know.
All right. Well, we're going to have to find out. We'll be back with more right here on the Mountain Morning Show.